Good day, family. I believe you are doing well and you are having a good time. I'm going to do a short teaching on how to use the Asian session range. We're going to learn how to use the Asian session range. We'll be able to learn how to use it after today's lesson. You will be able to know how to apply it in your trading. You will be able to know when to avoid it and when to take advantage of it. You will also know what its significance is for whenever it's formed each and every day. So the Asian session is so important, very, very important, because it's the first session which starts the day. It's the one which starts the day. Most of the critical decisions are made during that session. So we're going to look it into more detail. We're going to learn more about it. We're going to see how to use it to our advantage in our trading models and in our trading. So make sure that you are taking some notes and your pen is ready to learn this knowledge that I'll be sharing with you. So Asia. So there is a specific time. There's a very specific time that allows for the formation of this Asian range. So I have a specific range which I refer to as the Asian session. This is the one here which I'm looking at. This is my Asian session there. Those are my Asian session. So we're going to look into some of the things to see how we can toggle around the Asian session. But before we can get into the charts, I just want to share with you this Lego templates which I've drawn. So you realize that the Asian session is the session which starts the day from what you're going to learn today. And you see most of the time that it's typically small. The range is usually small. It's around 25 to 30 pips. And also you will notice that and the market tend to be quiet during this period with not much activity. During this period there is a lot of accumulation of orders that is taking place. Liquidity is being engineered above the Asian range and below the Asian range. And also one of the things that you will notice is that you can see that this range is very crucial as to how prices are gonna unfold during the day. So I have a few profiles which I've drawn here. You can see that this profile here, price traded first above the Asian range. So it usually trades above the Asian range 25 to 30 pips again. Sometimes it can trade above it 15 pips, sometimes 10, depending on how far in proximity is it from the PDRs which will be used to key these highs and lows. So it can go up above the Asian range 15 or 25 or 30 pips, taking out the liquidity that will be resting there and then go down and break the low, retest it and continue selling. This is one of the profiles which can happen using this Asian range. And again, sometimes price just consolidates in the Asian range, and sometimes it doesn't take out the highs. It doesn't take out the highs. This can be caused by the fact that maybe price has ran the liquidity on the previous day, it has already taken the liquidity, or maybe there is a heaviness in the pair that will be trading, so that can prevent price from going up, or maybe price will be trading at higher time frame PDRA already there, so it will just be pushed down, it will just break the Asian range below and just retest it and continue selling. Sometimes price trades above the Asian range and then runs all the way back down, trades below the Asian range, and then comes back inside the range and consolidates. So it just trades above, trades below, then runs back inside the range, and price just stays in there. But in this case, you can see that it runs the buy side and then it runs the sell side. It takes out both sides and then it goes back in the middle. And sometimes price is just contained inside the range, inside the Asian range high and Asian range low throughout the day. Price just goes up and goes down, just playing inside there. This typically happens when there are high impact news which are going to be anticipated at a later time of the day, or maybe in the coming day. This can happen. So I'm gonna hop into the charts and we are going to see this real life in charts, and we're going to learn and see how price is affected by this range. Alright, we are here on our charts. This I'll be doing this on the Euro USD. I'll be doing this on the Euro USD. I believe you can already see the profile which was in play today by just looking at this Asian range here. As you can see, what did price do? What do we see? What do we see? So you can see that price from this Asian session here, price engineered buy side liquidity and sell side liquidity. So we know that EU was bullish. We have been anticipating bullishness in the Euro USD. Yesterday I released a video of the analysis that we saw that EU was bullish and we were anticipating it to go up. So what do we see here? Price consolidates, and what does it do? It trades below this session's low here. What rests below there? What do we have below? We have sell stops. Some people are willing to buy, to sell at a lower price here, but the algorithm is going to allow price to trade below here. If price trades below here, and it allows those who know and understand what's happening to buy from those who are willing to sell at this lower price here. So what does it do? It trades below it there, and then boom, it goes all the way and trades above it, and guess what? It retests it. There can be your buy there. You can buy here. If you missed this buy, you can buy above the Asian session range high here. So you can see that this session has now turned into supporting price to the upside. It turns into a wall that prevents price from getting inside and going back down. Price is protected because the damage is already down, is already done on this downside. There's no need for price to come back. Our focus is on the higher time frame liquidity, which price drawn to here during this FOMC news. So you can see that price opened, went down. That is the first profile which I showed you. whereby price trades above or below the Asian session and then forms the low or the high of the day. Here it forms the low because price is bullish, and then boom, price goes all the way up. If you miss this buy, you can get this buy. If you miss this buy, you could have got in here on this candle here. Then it delivered nicely. And if you look at it carefully again, on this day here, isn't this same phenomena which happened here, is it not the same as on this day here? It's the same. How many pips did it trade below here? It just traded 7 pips below, and then boom, it went up. You can see that price is not even taking long when it trades below here. That shows you that this is super bullish. Price is very bullish. And then the same thing happens here. Price trades below. How many pips? Another 7 pips again. It just trades below it, and then guess what? Boom, it goes all the way up. Trades above the range there. What does it do? It buys. Same model, same framework, same setup, repeating. So you can see it trades above it and then it buys there. You can take your buy there and then write it. Whenever price is bullish, this is what you have to look for. This can be your model. So you can take your Asian session and look for price to trade below it, 10, 20 or 30 pips below it, and then allow it to trade above it and then take your entry there. If you are afraid to enter at the loss, that can be your model. And let's look on this day here. This is the Asian session. Someone will say, so this thing has been there when the chart's repeating like this. Yes, it's been there. You just have to know what you are looking for. That's the Asian session there. Price trades below it and then goes back to it and then trades below it one more time. Remember, we are still bullish. And then what does price do? It trades all the way, breaks above it, retests it there, and then you can take your entry there. Then boom. Or if you missed this entry here, you could have took your entry on this order block here. As you can see there, how many pips did it trade below? Around 33 pips, which is not far off 30 pips. Then you could have took your entry there and then rolled it all the way up, taking your 90 plus pips. You can see that what did price do on these days? It price opened, traded below the Asian range, went above it and retested it and bought. Why is it trading below? It trades below the Asian range to take out the sell side liquidity, which is resting below this range. And then it does the same thing on this day here, and then it does the same thing on this day here. So this happened for 3 consecutive days. This was Monday, this was Tuesday, this was Wednesday today. So you had this nice delivery of price for 3 days. So tell me what you could have done if you knew all of this. So that is why I say it's important for you to learn how to read price action so that you may be able to know where price is going. When you know where price is going, entries don't matter. You can use simple models like this. Waiting for price to trade below the Asian range, buying below it, and if you miss it, buy above it when price comes back and retests it. So if you know that price still has room to go up, like on this day here, and on this day here, and on this day, it will be easy for you to find an entry in the market. You can even, when the market opens, and just buy and use your stop losses the previous day's low. And you see that price will still deliver in your favor, which tells you that entries are not that important. What's important is knowing where the market will go. Because if you know, let's take an example, that the market is going to go to this level here and it's still here, what is it that can stop you from buying at this point and this point and this point? And then use good risk management to cover for any kind of drawdown. Nothing can stop you. So this is how you can use the Asian range to advantage. And if you look into this day here, you can see here on this day, let's see the Asian range, how much was it? It was 32 pips. What does price do? Price trades above it. It just stalls and then it goes one more time above it and then it trades back inside of it. There was no much clear direction on this day here. The range was even big. I said the range has to be 25 to 30 pips. When the range is like that, most of the time price action will be much more cleaner. So you can see here, price was just doing all kinds of things here. Traded above it and then traded back inside the range here. Didn't even go below here. And then it went up again, closed above it. So on this day I could have not taken a trade. Why? I will be bullish. We have been bullish on the Euro USD. So is there anything that tells us to buy on this day here? Did price trade below the Asian range when it opened at London? No. So when this model is not in play, I don't do anything. If I'm using this Asian range session to frame my setups, if I don't see something like this, like this, like this, I'm not going to enter. And we are bullish here. Price didn't do that. So what's the use of entering when something which you are looking for hasn't played out? There is no need. And then let's look into this day here. We have this day here. Price trades above the range high. You see, I will be bullish on this day again. Let's say I was bullish on this day. Price trades above it. It trades above it nicely like that, and then it comes all the way back down. Maybe we could have took this entry here at New York and expected it to rally, but it just went back inside the range and then it stayed there. So these are the kind of days where even if maybe you are right, price is not going to reward you that much, but you can see that this was a nice move. 50 pips, it's a lot of pips. You can make it's a lot of pips that can help to pay your bills. So you can see that that was a nice reaction there. But you can see this is one of the profile which I shared, where I told you that it can trade above and trade below and then come back inside. That's what happened there. And then there was this profile which I shared one more time again. You saw it in those pictures which I shared when I started. So here you can see that price, the Asian range was 34 pips. So what happened here? Why did price not come above this Asian range when it was so bearish on this day? Price already took out this buy side liquidity here. You can see there was this 1, 2, 3 highs here. They were already taken out. This buy side liquidity was already taken out. And then what happens? Price trades below the Asian range there. You can see it trades below the Asian range and retests it. And guess what? it tanked all the way down. It tanked. And then this model again, where it takes the sell stops and buy stops and trades back inside, keeps happening. And now we have this Asian range here. What happens? What is happening that we are seeing here? Price engineers this low and then engineers this high, and then it goes all the way and engineers equal highs, and then boom, it runs all the way and takes out the sell side liquidity. What is this? Equal highs. What do you think price is going to do? It's going to gravitate back to this equal highs because there's a lot of liquidity risk in there. And guess what? We traded below here, 148, almost 15 pips, and then boom, it goes all the way up for those equal highs. And here it was an NFP day here, if I remember. So you can see how price can be held inside this range here, held very tightly inside this range, and then on the news release, boom, look at how they are holding it. They tap the buy stops and then go down and tap the sell stops. They have absorbed the liquidity above and below the range, and then they wait for the news, and then boom, they just explode. You can see how this range is affecting the future prints of price. And then, yeah, just repeating the same thing over and over again. On this day here, let's say you are bullish, as it was bullish, even though it wasn't moving that much. Price just gravitated towards the Asian range high. It didn't go down first, and then it broke above it, retested it. You could have took your buy here and then took your 25 pips run here to clear this buy side liquidity. And on this day, it was a consolidation day, as I explained that sometimes it just held inside this range. And the same thing here, it was bearish, price is held inside and then it taps the buy side liquidity here, it absorbs it, it just taps it. That page was enough to offset the orders which were resting above here, and then it runs all the way back down, takes out this low here, breaks structure, fair value gap, trades back into the range low here. That could be your entry there. And if you missed it, another entry can be, you can see here this breaker here. We have this low, taking this high here, and then price breaks below this low, retests it, and then boom, it sells. And on this day here, price offsets this liquidity, and let's say you know that you're bullish, and then what does it do? It sells all the way, and then it pages this liquidity below here, absorbs it into the market. Plus break structure here, comes back into this bullish breaker, and then boom, it buys. Sometimes price doesn't do anything, just consolidates like you see here. And sometimes this is what takes place. Price doesn't go above the high or the low, it just breaks the low there, and then it retests it and then continue going down. So like here, price was bullish, breaks above the high there, then immediately that candle it opens and then it continues to dump to go all the way up. And on this day here, price just pitching its hand out of the window here, just touching and touching this liquidity, absorbing it, and then all of a sudden it runs up, taking out that high, and then continue going up, and then it comes back inside the range again. And then on this day here, which was bullish, price trades below the range, and then all the way boom, goes up. On this day, it doesn't go up, it just breaks below it, retests it, and then continue going. So price will just keep playing around these profiles over and over again. What you have to be able to understand is to see which profile is in play. I have shared them with you. So, and understand how to apply this range in your trading. This is very powerful. I don't want to lie to you. This is very, very powerful. If you study it and apply it into your chart, it will pay you, it will help you understand how price is delivered. This is very, very, very powerful. Get into your charts and study it and see how you can apply this into your model and see how you can use it to advantage. You don't even need my signals, you don't even need anyone's signals when you understand how to use this range. All you need to know is where is price going, and if price is going up, wait for price to trade above the Asian range high. And if you are afraid to enter above it, wait for it to break below it. Sell on a retest of the Asian range low. That can be a simple model that you are just using. You can see here, I talked about this kind of profile where the price is piercing both sides. And this one is a buy profile. How many pips below? 20 pips below the Asian range low here. What time is it? New York. Maybe that's a higher time frame PDRA here. Maybe it's into a 4-hour order block. What does price do? Then buys. You buy. Your first target is the consequent, the 50% of the range, and then your second target is this Asian range high, and then the liquidity which is resting above it. How far do you go? 10, 20, 30 pips above it. How far did price go? You can see here it was 10, here it was 20, and then there was 30. So just like that. And then on this day here, on this day, price pierces above it, and then what do? Let's say you're bearish and you sell there, and if you miss this sell, should you be afraid that you're not going to see an entry? No. Price goes down, break structure here. What's this? The bearish order block. What does price do? React inside of it. Let me show you. That's a bearish order block there. And you know that price is bearish, and your target is this low here and this Asian range low, and you sell it. You can target 10 pips there, and then 20 pips, and then 30 pips. Bang. You can even do the next. Let me show you. I think precision is what most people like to see. So that sometimes people like to see precision for them to believe. I don't know why. 20, as you can see there, and then 30. You can see there. That's your 30 pips there. 10 pip rate, 20 pip rate, and then 30. Targeting that. And the same thing you can do it on this day here. That's your 30 pip, 20 pip, and 10 pip run. So bam, where does the high of the day form? Exactly there. Is it random? Maybe. If you believe that there is no an algorithm, you might say it's random. But we know that this thing is systematic. This thing is predetermined and it's pre-planned. Every level that you see price trading to is predetermined. They already know what price action is going to form today, what price action is going to form next week. They have already predetermined all those things. The levels are already there. Price is always referencing old price points which price used to trade to. It's always referencing those points where it has once traded to. That's where the liquidity is. It engineers liquidity and then comes and seeks it. It leaves footprints behind which will come later to revisit. So you can see the price was bearish, breaks below here, and then comes back, retests it, and then bang. So on this one here, you can see that it's retesting the 50% of the range there. So you will see that the high, the low, and the middle of this range is very sensitive to price. Very, very sensitive to price. And again on this one here, you can see that the consequent encroachment of this range here is very sensitive to price. Price breaks above it, comes back into it, and then continues buying when it's bullish. Sometimes it just does that without going below the lows. Most of the time you'll see that it happens when the liquidity is already clear. You can see here on this day, this low was already cleared. So they have already took out the sell side liquidity. There's no need for them to run this lows one more time. They've already booked their transaction in here. They've keyed in their orders already on this down move trading below here. So price just continues going up. And as you can see there, price trades above it and then sells. How many pips above it? 15 pips, and then it dumps down. And on this day here, same thing here, buys, just the same thing, it's just the same things, guys. As you can see, the price comes back and plays around it. The tests and sells. We can keep doing this over and over again, but I believe you can see the pattern now. Breaks below, sells, above, buys. You can see the pattern. So for you to make use of this range and to maximize its importance is you have to know where the market is going. Know your flow on liquidity, because you cannot, let's say you are trading on this day and you think that price is bearish and you see price coming all the way down, and then you think that price is just going to come back and retest it and sell. You see that it can screw you up and continue buying because price is bullish. So when you know that price is bullish, you know that price is trading below this Asian range like this for it to buy and trade above it. So it's important, it's very, very crucial and very, very important to know where price is going, because without knowing where price is likely to be drawn to, there's no need for you to take a trade. What's the use of participating in something that you don't know its outcome? So you have to know that there's a higher probability of this trade going above this high here. And if I see the Asian range forming like this and price trading below it, 10, 20, 30 pips below it, I'll be looking to buy below it and then target that Asian range high and the previous day's high. So you have to know, and I'm exposing you to this knowledge so that you may be able to know how to use it. And since I'm doing those weekly analysis and reviews, I'm telling you where price is going in those weekly analysis and reviews, and you can use this to your advantage to look for setups in the direction that will be pointing to. That's why it's important to watch those reviews and to study them. It's important to backtest and to see how our week unfolded. It's so important. So price keeps doing the same thing over and over again. You can see here price was bearish. It trades above it, breaks below it. If you miss that, enter on a retest here. It went a little bit deeper, it's still fine. But you can see, look at the bodies. Look at the bodies of the candle. And then boom. Sometimes it's just going to play around the session like you see on this page here. But sometimes it's going to be clean like this, whereby it just bangs above it, 24 pips above it. And then what does it do? Then it sells nicely. As I told you, sometimes it's going to spike the high, the low, and then trade back inside the range. And sometimes price is just going to be boring like this, as you can see. Our main focus is looking for this model whereby when you are bearish, wait for price to trade above the session, sell it above the session, 10, 20, 30 pips above it, and then take your profit below the low of the Asian range. And when you are bullish, wait for price to trade below the session, buy it, just like that. So you can see the price keeps doing that, and I have marked out all these boxes all the way from January, all the way from the beginning of the trading day of this year, and you can see how important these sessions are to price action. Sometimes they act as magnets. That's one of the things that you have to realize. These sessions can act as magnets to price action. Like if you look into this session here, we're going to take the first session of the year. I'm going to project it in the future. You will see how price is going to react. I'm just going to project it. I'm going to project it. You can see there how price came back into it, they hit it, and I'm going to project the low of it here. I'll project the low there. You can see how price came and filled that. It filled that range, and it can keep doing that over and over again. Like if you take this here, then we project it. You want to see that filled. You can see that it was left unfilled. There's a space in here, so price will come back into it to try and fill it, and then it got filled there, as you can see. It just got filled there, and you can see how price is crouching below that level there. This is crouching liquidity just below this level here. It is so much well engineered below that level, and what does price do? It expands nicely on this day here, buys, and then touches that high there, those relative equal highs there. And if you project that, it was also filled there, nicely filled that level. You can even see the reaction of price there. And if you take this, project it, nicely filled there, look at how price is trading in this range here, and also this one too. You can see how nicely it got filled there. Look at the reaction of this candle in there. Alright family, I think I'm going too much beyond what I wanted to share. So that was what I wanted to show you and to share with you. Study it, take notes, and see it for yourself. Look for it in the charts so that you may be able to know when and how to apply this. I've already showed you almost, I don't know if it's 3 or 4 different ways using those pop-ups which I shared before on how to use it. So you can look at it by your own self and see how you can be able to take advantage of what I share with you. And I will continue sharing my own view through my video analysis of the um, weekly analysis that I usually share each and every week. And if I see any setups, then I will share with you. But the reason why I don't share a lot of setups and with you is that I want you to be able to see it for yourself. If I give you the analysis pointing that I'm looking at the market and I believe that it's going to go to this level, I want you to have the confidence to go into the charts and try and enter in that direction and look for your setup, because I want you to be able to be independent from me so that you can see it by your own self. So I'm just trying to help you know how to read price action on your own without needing the help of anyone, and trusting your own gut and your own system. So let's keep learning, let's keep studying and improving our skills each and every day. Trust me, it's a matter of time before you will be able to see price action in a way that you will like it. This is not easy. Trading is not easy. I'm telling you, it's not easy. Just make sure that you don't give up. Don't ever think of giving up. Keep on grinding and keep trying and trying and trying and trying, and never ever stop trying. Never ever stop learning until you earn. Thank you so much. Have a blessed trading day today. Uh, I'll be looking forward to see you taking trades and killing it using this knowledge that I'm sharing with you. I love you all. Take care and keep studying. Goodbye.